Hello everybody, this is Matador from freetradingvideos.com. It is February 20th, 2009. Looking at another sell-off day here. More news. Wall Street falls amid ongoing economic concerns. So the Dow is about to hit an 11-year low. It's falling to 6-year lows already. Take a look at that real quick. So here is a weekly chart of the Dow. Kind of selling off quite a bit here. If you scrunch this up, here's the low, 7197.49. You can go back in time and see that back in here, way back in 98 or so, 97, it hit that same number. So it hadn't been back to this low until it's sort of flirting with that right now. Again, that's significant information to take into the house to understand that here we are kind of just bleeding south a little bit. That's the Dow. The S&P 500 hasn't quite hit that level, but it's close. So you can see that same area, but it's not quite as bad as the Dow by a little bit. And then the NASDAQ, there's this broad market, is a little better than both of them. So there you go. Intraday, right? You can see how the NASDAQ and the S&P, a little bit weaker, and the Dow are all reacting to that information. All right, so what information is it? Again, just general pessimism about the global economy. A lot of poor numbers came out. January rising consumer prices was the largest since July. Economists, government believe that a recession will keep prices in check this year, however, so nobody's really holding any credence to this. Fourth quarter profit in Lowe's was down. JCPenney's getting beat up. Bank of America's chief executive Ken Lewis got a subpoena. GM unit Saab files for protection. Just on and on. So the news isn't that great, and people are nervous about that. Next week we have, of course, economic numbers coming out, including consumer confidence. Bernanke's talking on Monday here. Existing home sales. So a lot of news coming out. If you want to click on any of these individual ones, it'll tell you a little bit more about it, including how much of a market mover it is, typically, and then it gives a nice brief description of those things. So kind of a cool thing to do and keep up with, especially if you're looking at the markets intraday. But anyway, back to the markets themselves. So we'll take apart the S&P 500, or the spiders, if you will, since this is what we've been looking at. Big gap down this morning. Tried to fill that gap. Didn't quite make it, even to the low of that, and we have a lower swing high now in this area. Even a lower swing high, lower swing low. So a lot of information, again, not being digested well by the markets. You can see these areas that we're in right now. Kind of pinching down. The whole time that's going on, something interesting. Look at the tick. Spent most of the day already below zero. Right, so just few little spikes up above the zero line, up to 500. Usually plus 800, minus 800 are numbers to look out for, but that's pretty telling. And the trend is also very telling. Just like yesterday, big gap up in the markets, had a large gap up in the trend. Again, not confirming the gap up in the markets. In this scenario, the markets gap down, and they are confirmed by volume flowing into stocks that are selling off. Never even have made it down into the below 1 level. So not a lot of volume, again, flowing into stocks on the rise. Something to watch out for. We are coming back a little bit, but again, it's not even below 1. Not a lot of good confirmation here. So it's difficult to want to go long in something unless it's a very relatively strong stock in this broad market. All right, the VIX is also something interesting. We are seeing just a little bit of a bounce here in the broad markets. Right in this level. It's selling off again. The VIX had hit its head right on the 50 mark. See that? Right at the open? Sold off. Came right back up to the 50. 50 says we're testing this area again. The number I was looking to go below for so long, this 50-yard line here, is right in there. I'll just paint it in. So it's nice to see the VIX drop back below that. A couple of spikes now, but it's been fighting that again and again and again, day after day after day. These are daily charts now, so the 50 level is significant now for the VIX. If we stay below that today, then it's a little bit better than, of course, if we went above that and started to see that slide again, and this would be corroborated then with the VIX rising above 50. The trend would most likely rise at the same time if that happened, and you'd see a further decline in the broad markets as well. So again, just be careful how you go long here, unless you're again looking at a very relatively strong stock in the face of this, and even then, always be careful. So I'm preaching to the choir here. If you guys have any questions, let me know. I'll be glad to try to answer them in a video format, and hope these little interludes in the market are helpful in alerting your eye to certain things that you may have missed on your own, and you can learn something from them. So again, happy Friday, everybody. Hope you guys have a great weekend, and I'll talk to you soon.